On this episode, I'm going to be going over what a home loan is, also known as a mortgage, with a dear friend and business partner of mine, Jose Gutierrez. Jose works with Primerica Lending, and we have had great transactions together, but we've seen a lot, and we've seen a lot of people who don't exactly know what a home loan is. And I think it's very important to understand what a home loan is before you actually apply for one. So I hope this episode helps you guys. Well, thank you for coming, Jose.
Yeah, of course.
Can you tell us a little bit about yourself and what do you do?
I grew up in Sunnyside, Washington, so about 45 minutes away from here. Farm working parents, blue collar. I grew up working in the fields, working construction, and then graduated from Sunnyside High School in 2012. Went off to college at UW. Go Huskies, right? Stayed in Seattle for almost 10 years. Kind of climbed up the corporate ladder, and then it was always a mission of mine to make it back to to the Valley or Tri-Cities. I always wanted to make an impact in my community, and I met my wife Liz in college. She's grew up in Wapato, so decided to come back over to this side of the state, and then. My wife was a high school teacher. I worked construction, and then during the pandemic, we actually had the opportunity to start our business. So my official title, I guess, is financial advisor. So my wife and I, we own our own brokerage here locally, we help families with financial planning, life insurance, and also mortgage loans as well.
Yeah, I think that's pretty cool that you guys are everything, because I think when someone is looking into getting a home loan, most of the time it's with a mortgage loan officer, right, who's solely focused on that. But you guys get to see the whole picture, right?
Yes.
How do you do that?
Yeah, I think, and that's one of the reasons why I love what we do with our company, is that I think, buying a home is usually going to be most families' biggest investment they'll ever make, right?
Yeah.
Especially first generation or even second generation homeowners. They're probably thinking of that as their forever home, right? We don't really have the starter home. It's usually we get into one home and that's the home we're in forever, right? Now things are changing a little bit because we're starting to get, more knowledge about, investing into real estate and things like that. And what I love about what we do is that we get to really see how a home fits into a family's long-term financial plan. Because it doesn't always make sense, to buy the nicest house, or maybe people, have plans to relocate, or, they want to reach certain goals or an age that they want to retire by. So they can either, buy too much home, if that makes sense. And a lot of families kind of get into that situation where just because you qualify for something doesn't mean that it's necessarily something you should be buying.
Right. I like how you pointed out that. But going way back to square one, can you break down what a home loan is?
Yes. So in simple terms, a home loan is just like any other loan, like an auto loan or something like that, where you go to a lender, typically a bank or a mortgage company, and they allow you to borrow money to purchase a home. And you pay that lender or that bank back the loan, the amount of money they let you borrow plus interest. And then sometimes in that home loan, you can also include your homeowner's insurance, property taxes. For most first-time home buyers, they probably heard the word escrow. That's what your escrow is. It's your property taxes and insurance. It just makes it simple because it's just one payment. You send your payment every month, and they pay for the insurance, they pay for the taxes, and you're just worried about making one payment versus having multiple payments.
Yeah, no, that was something that when I first entered this industry, was like, wow, that's beneficial.
Yes.
Because a lot of people think, when people say I don't want to buy a house because then I have to because then I have to pay for the insurance, or I have to pay for the escrow or whatever, all these fees, but it's really convenient to have it into one loan.
Yeah, it really makes a lot of sense for most families, especially families that aren't too knowledgeable on, how to handle their finances, which is another part of what we do, right? Is we not only help our clients get into a home and acquire a mortgage loan, right? We teach them how to manage that mortgage loan correctly, right? Whether it's to pay it off earlier, or maybe they have never had the opportunity to set up a budget. We help them understand how that mortgage loan is going to fit into their budget.
Oh yeah, I mean, when you get a mortgage loan, typically it's a little bit much more than renting.
Yeah.
But it has a lot of benefits, right? When you get a home loan, what are those benefits?
Yeah, well, the first benefit, obviously, instead of renting, you're able to own something, right? Eventually, you don't really own it until you pay the mortgage off, but eventually you get to own it. And the nice thing about property or real estate is that it typically keeps up with inflation, right? And you keep up with inflation because that home builds equity, right? So as you're paying off your mortgage, you're owning more and more of that house. And then as it's increasing in value, your initial investment is worth more over time. So the idea is that by the time that you finish paying off your home will be worth a lot more than what you purchased it for. And essentially, right, giving yourself some return on that money if you decide to sell it. And even if you don't make it the full 30 years, because I mean, let's be honest, a lot of people don't plan on staying in a home for 30 years. But even 5-10 years down the road, you are going to build up some equity in that house. So you can, sell that home and use it to purchase another home, or maybe keep it as a rental property. So there's a lot of options that you have versus renting. You rent a house or an apartment or a condo, and you're gone and you don't really take anything with you besides your belongings, right? That someone else owns that property.
Yeah, you start from zero basically back. And that's the cool thing about home ownership, I think, is that you get to invest in yourself. And then if something ever happens, God forbid, right? But if it does, you have that option to sell your property. And then just, either if it involves with like a death for funeral expenses or a tragedy, right? Because you've seen it happen, right? You can just invest it. And you can sell your property or have that options to refinance or do a lot of things with a home loan, right?
Yeah, I mean, you can pull a home equity line of credit. You can do a HE loan. So maybe you have, like during the pandemic, we saw it a lot where a lot of families weren't working, so they got into a lot of credit card debt, right? So there's a lot of families that I've been helping where they're actually tapping into that equity of their house as a loan, and they're essentially able to pay off their credit card debt and then pay that money back to a mortgage company at a much lower rate than what their credit card would be. So credit card rates right now are like 24 to 29%.
They're so high.
And I've had clients that have been able to get HELOCs for 8%, 9%, which over the long run, it helps them save a ton of money on interest. So it does give you a little bit more options, right? The last thing I would want is for a client or, someone that I help to have to sell their home to cover the cost of a funeral or something, right? Which is why the financial planning piece is so important, right? The last thing we want is for them to have to sell what they've worked so hard to acquire just because someone passes away. So that's why we help families prepare with, having emergency funds and budgets and life insurance and all that stuff, because it all plays a role into your long-term goal. Yeah.
And that mortgage is part of that long-term goal. It's a huge factor.
Yeah.
Should be taken serious.
Exactly.
But again, right, that's a mortgage, but there's different types of loans out there, right? Mm-hmm. Can you touch over like the most popular ones and who are they most applicable to?
Yeah. So, I mean, the big two is going to be conventional and FHA, right? We've all heard that. One thing that I kind of want to, talk about right off the bat is the days of having to put 20% down to acquire a mortgage are long gone, right?
I still hear that. I still hear that.
I actually just met with a client earlier today. He's 19 years old. He's been working since he's 16, and his dream is to buy a house. And he's saved up $40,000. And he's like, okay, well, I'll be able to buy a home in like 10 years. And then I started talking to him, and I was like, well, actually, there's options. So we started talking, and we're actually going to be starting the process of him purchasing a home because he's actually going to be going into an FHA loan, which is a loan through the Federal Housing Authority. So it has, you have the ability to actually put a lower down payment. So he's going to be able to purchase that home with 3.5% down. Yeah. He's in like that 300,000 range. So he's going to be at around $11,000 to be able to move into a home, and he's going to have $30,000 left over, right? So that's a big one, FHA. And then conventional, usually it's reserved for people that have lower debts or a little bit better credit scores. The positive thing about the conventional loan is that you can get rid of your PMI quicker, which is your private mortgage insurance, which essentially is money that you're just paying to a mortgage company as an insurance in case you default on the loan. It covers it and things like that. And those loans, I mean, they vary depending if you're getting a conventional loan as an investment property, as a first-time home. It could range anywhere between 3% down, 1% down, all the way to 15, 20% down as an investment property. So, but those are the two popular ones. The other ones that I've seen that are very popular are VA loans, which are reserved for veterans or members of the military or family members of military. Yeah, I mean, besides that, there's a couple of other options, but I would say those are typically the big three. The big two being conventional and FHA.
Yeah, and they all have their pros and cons, right? I mean, the FHA one, it's the most popular one. FHA is basically government,
Yes.
It's government funded, but they have a little bit more rules, right? Versus the conventional one, which is a little bit more lenient, right?
Yeah.
How do you know to choose the right one?
Well, it all depends. I guess usually the biggest deciding factors are going to be credit, how much money the client has to be able to put down on that home, and then their debt to income ratio. Those are going to be the three deciding factors. If clients have good credit, low debt to income, and enough money to maybe put 5% down is usually what's required on FHA or on conventional, we go with the conventional because they can typically get rid of that PMI quicker. And there's usually a cheaper interest rate. The last couple of years has been a little weird in the market, as we all know, right? So FHA loans actually have lower interest rates than conventional.
Really?
Yeah, with the Biden administration, there were some changes that were done on the fees and things like that with FHA loans. So it actually got cheaper, but you do have that PMI, which is a lot higher than what it would be in a conventional. So it all depends on what the family's budget is. And then we kind of just go from there, just have a conversation and, maybe the family plans on refinancing and things like that. So they might, even if they qualify for a conventional, they might want to go FHA if they plan on refinancing, a short period down the road. It all depends on, like I said, the long-term vision of that family and that home.
Yeah, I like how you touched about refinancing. I feel like a lot of people, they just think that, especially with these big rates right now currently, that's how that loan will stay the same. I mean, it will stay the same until you refinance, right? Mm-hmm. Which basically, how would you describe what refinancing is?
So a refinance is, I guess, how would I say this in a simple way? It's as if you're trading in your rate for a different rate. So if you purchase, let's say, if you purchased a home last year, rates were really high, right? They were like 7s and 8s. So let's say that rates drop down to like a 4 or 5%. You can actually go back to your lender, and as long as you've built up enough equity in that house and you don't have late payments and things like that, you can actually ask your lender to refinance your home, and then you could actually trade in your rate for a lower rate. And if you've already built up that 20% equity, then you can get rid of that PMI, which would also help you save a couple $100s on your mortgage payment.
Yeah. No, there's a lot you can do with your loan. But we really appreciate you being here, man. Is there any last words of wisdom for those who are looking to get their first mortgage?
Yeah, I think I would say, reach out to someone. You're really not going to know where you're at in the process of being able to purchase a home until you talk to someone that can help you establish a game plan, right? Yeah. Once you actually sit down and you paint a clear goal and how you can accomplish that goal, it just becomes a lot easier, right? Like that 19-year-old that I said, he thought he wouldn't be able to purchase a home until his 30s, right, when he's actually ready to purchase a home now if he really wants to, right? The other thing too is there's a lot of options out there for people that are looking to get into homes. We actually have a super awesome program that I've actually been talking to a lot of people about where you're only required to put 1% down. The only requirement is that you have to be making 80% of the median household income for the area. So for the Tri-Cities area, as a married couple, that would be about $88,000. So if you're making $88,000 or less, you actually only are required to put 1% down, and then you have no PMI. So for a lot of families, it's making it accessible to be able to purchase a home.
Oh wow! Well, thank you so much for being here, Jose. I appreciate your time.
Yeah, of course. Pleasure being here.
And that is a wrap. I want to thank today's guests for taking their time to share their wisdom with us. I really hope you got something out of this episode. If you would like to connect with them, their contact information will be around here. And if you have any questions about buying or selling or anything, feel free to contact me. My socials, my emails, all my information is somewhere around here as well. And I'll catch you on the next episode.